Well, the selling definitely is not subsiding at all. I just want to take a look at what the global markets are up to as well. While China, of course, is shut on account of a trading holiday, Hong Kong lost about almost 350 points. Japan lost about nearly 1,000 points. And Europe is no different right now in trade because across the board, there too, you're seeing slashes of more than 1.5% pretty much for all markets. Look at FTSE MIB, that's down 4% right now. It's a 1,500 point cut that you're seeing on that index alone. Stock 600, and these are the broader, pools over there. 2% is the cut that you're seeing for that index. 1.6% down for FTSE. DAX down 2%. CAC as well lower by 1.6%. Important to take cognizance of what perhaps the US futures are up to right now. And what is it that you're seeing on account of those, and whether or not it is seeing some more excruciating pain after what turned out to be a vicious sell-off that you saw overnight. And there you go, S&P futures down almost 1%, 0.5% down as of now for NASDAQ, and the Dow futures once again are staring at a near about 400-point decline. So clearly smacking that the selling is not done with that yesterday's price action. There's more pain to go, definitely. Aditya, what is your own sense on what domestic participants should be looking at in terms of a portfolio construct? Should the market fall further, would you look to buy anything?
Hi, good afternoon. I think markets will remain under some bit of a selling pressure because today some key important levels have broken on the downside. 23,100, 22,900. These were key important support levels which were holding on till this point of time. And today we see markets selling off. The only interesting point, Aisha, out here to note is the VIX is not seeing any major spike. There's no significant spike on the VIX. Which is a kind of a comforting factor as of now. So next week will be very important, though it's a truncated week again. It will be key to see if actually market bounces back. And again, as Bank Nifty was showing strength, now it's giving up its gain. So that is something a bit of worrisome. So 22,900, we need to see where we are closing around in and around those areas. If that is broken, I think one should still stay away from heavily getting into the market. 22,700 then is the next support area. Few areas where I think one can actually look at initiating fresh longs are clearly the domestic consumption space. The FMCG is bucking the trend, I think. So this is one space which can actually see some kind of a recovery from current levels. And if somebody has a strong heart, maybe they can start nibbling into some of these mid-cap IT names which have fallen significantly, fallen off the cliff. I would recommend don't go all in one go at current levels. Maybe do a staggered buying because a 10% correction in the Nifty IT index this week itself is massive. And you will see a recovery, Aisha, from these levels, of course. So maybe something like a Persistent Systems or a Coforge or an LTIM, all these stocks can be looked at. There will be a short covering rally soon in these company counters as well. But maybe look at staggered buying. Something can be bought today and next week, if you see a further decline, some more stocks can be picked up from this space. Metal for me is a clear avoid still. Because I see some more selling pressure. Banks and NBFCs do seem interesting to me. So apart from FMCG, and if you have a brave heart, maybe get into IT. Apart from that, maybe an FMCG and bank can also be looked at.
Okay. Narendra, what's your own sense? What would your portfolio bias be, or at least recommendation for?
Yeah, definitely. We would be more focusing right now on domestic-oriented stocks, and we also prefer banks, financials, and banks, private banks like ICICI Bank in PSU, SBI is there, then Chola Finance is there in NBFCs, Bajaj Finance is there. And apart from this, we prefer durables more, like Voltas, Blue Star, PG Electroplast, EPAM Durables. And after that, FMCG may also be looked at. And then in healthcare, we are more favoring hospitals rather than pharmaceuticals. So in hospitals, you can go for KIMS, then Fortis Healthcare. And apart from this, then defense stocks are also looking at looks like good opportunities coming in. Stocks like Data Patterns, Paras Defense, Unimac Aerospace. So these are the categories we are looking forward to enter into whenever the opportunity gives market gives the opportunity.
Right, so those are some of the opportunities that you can look at or tap into right now in this market. But let's talk about what exactly is happening with certain counters. Federal Bank, that one was actually bucking overall market weakness in today's trading session. You had CLA say there's initiated coverage on that one. So you had Federal Bank that was actually in the positive territory. Let's see where it is right now. Okay, still trying to hold on to the positive territory given the fact that banks globally are under pressure in trade today. You have the European banking index that is down about 7%. You had the Japanese banking index as well see a sharp knock on an intraday basis. And now you have Nifty Bank also that has reversed course. And Kunal, what's your take coming in on Nifty Bank?
Yeah, so I think it's bound to be that the index will also go into correction, but it's not a reversal of sorts, at least on the chart so far for the banking index. We are still trading above the 200 DMA. We are still trading above the crucial short-term support, which is around the 51,000 mark for the banking index. And I think the more important point is that many of the large cap private sector banking names are still showing signs of strength, whether it's the likes of HDFC Bank, Kotak Bank, ICICI Bank, or even the likes of Axis Bank, which has been showing good strength over the last few days. Selling has stopped for IndusInd Bank. You've seen new emergence of mid-cap private sector banking names like Federal Bank looking strong. Then you've seen IDFC First Bank recovering from those levels of 50, 55. So which means that the health of the bank Nifty is not as bad as what we've been seeing earlier. And I think that generally indicates that you might see this index being one of the stronger index going forward as well.
All right, so that's the take coming in on the banking index. Narendra, let me get your views on the banking space because this one is a consensus buy call when it comes to experts, given the fact that yes, when the corrections, when we were hit by correction, you had this entire space actually see valuations correct as well and made it reasonable for people to look at it. What's your take now? Do you think that banks is the go-to place, and especially when you talk about banks, is PSU banks?
Definitely, PSU banks are right now at good valuation. Even if you see in these results, if they are able to maintain their growth as well as names, then I think there's a good scope of valuation scaling back to earlier levels, which we have seen correcting in past few months. Also, just 2-3 days ahead, the RBI policy meet is also coming, so expect some rate cuts there also because we have seen inflation coming down and with the crude also coming down. So the expectation of rate cut is also pretty much higher. And then again, good monsoon would also give a good growth impetus to rural. So I think credit growth is also expected to remain good, especially retail credit growth. Hence, the banking should not be worry as far as growth is concerned. So therefore, we are positive on both PSUs as well as private banks.
Great to have you on the show. Thanks as always for joining in and for your time today. Let's just take in some closing trading ideas as well on that note. Aditya, what's on your list?
I've got a buy recommendation on Colgate Palmolive, Aisha. I think, as I mentioned, FMCG, I think so, should outperform going ahead. So I've got a buy on Colgate Palmolive. A good consolidation is going on here for a target of 2,600 on the upside. Can be bought with a stop loss at 2,330 on the downside. Unfortunately, Voltas is looking weak on the charts and it has been seeing selling pressure continuously, broken down from a downward, from an upward sloping trend line as well. So I got a sell recommendation on Voltas for a target of 1190 on the downside, the stop loss at 1350 on the upside.
Kunal, what about your strategies?
So I'll go with the Ban Marico. That's a chart which has been doing reasonably well, trading above the 200 DMA and now I think closer to that 650, 670 plus mark in terms of a breakout.
All right, so those are the closing trades coming in from Kunal as well as Aditya. But on that note, we slip into a break on this edition of Closing Trades. But remember, the global markets are reeling under pressure. But how does India stack up amidst the tariff fiasco? We spoke to a whole host of guests. Hear them out.
Right now, India will outperform for sure. But it should not stand in the face and have massive outperformance. Then more people will feel nervous and maybe more selling will come. Just be little bit cautious, but let it be as it is. But don't get excited that we are beneficiaries of something. We are not beneficiaries. We are just like every other country.
India is emerged as a better sweet spot relative to China, relative to Vietnam or Bangladesh, where we face competition from the export front or any other country. On the relative basis, we are in a better shape. Dollar index has corrected. So again, emerging market theme can come back. So I think the way we took a conscious call in the beginning of March that trading bottom is round the corner, I still maintain we have seen a sharp 8% sort of move in Nifty is corrected. Maybe once this correction get over in a day or two, I think India has potential to recover further.
Margins in India, which are still sort of very, very elevated, will roll over. And that is the part that, equity markets are sort of not liking for the last 6 months. I think that would continue to sort of trouble you. But again, if you were to be a pure equity investors between US equity and Indian equity actually look a better place because the fear of, massive dollar, what you call strengthening is gone now, or rupee weakening is gone. RBI can cut rates now. And India has seen a cyclical slowdown already for the last 6, 8, 10 months. So at some point in time, some cyclical recovery will begin to happen with policy assistance.
I think China seems like a big loser right now, but China is already building the capability to take on America. And it as might seem like heresy and might seem like too fast pronouncement, but we could see the rise of China in the next 20 years to take on America as a rival. I think clearly in terms of what they've done to their economy, in terms of technology, in terms of trade, they're now trying to match America, and America is not understanding. The fact that they've got DeepSeek out there suggests that they've made very rapid advances in chip technology, very rapid advances in artificial intelligence, which has been America's growing point. So I think Trump is overstating his strength.
I'm bullish on China only because compared to everything else, China's been depressed. China's been down a lot, as you know. I mean, the Indian stock market's making all-time highs. China's been depressed. But as I look around the world, if you look at most markets have been having a very good time for the last several weeks or months. And when everybody's having a good time, it usually leads to bad times. At least that's what I have experienced in my lifetime. So I'm worried about nearly all markets.